The stock market is experiencing a small dip, let's call it, after weeks and months of stocks and indices going up and up and up. I think starting 2025 with dip buying opportunities could be quite good for long-term investors. In this specific video, I do want to touch on the semiconductor stocks. We can talk about other things maybe later today or throughout the week, but in this video, I do want to focus on the semiconductor stocks because we do have some news that does affect that sector. Now, right now, the stock market did come down a little bit pre-market. It does seem like we're going to open in a pretty red day. Now, we've seen that happen last week. Strong job reports, the economy is doing much better than expected. Unemployment rate is actually down a little bit. So the stock market doesn't like that because the stock market apparently lives off interest rate cuts, right? Rate cuts. Now, it's true that if interest rates do stay quite high, it's true that if you can get 4.8% or so risk-free rate, then yeah, maybe some stocks do not seem that attractive anymore. That is true. But if you're invested in companies, especially those in the United States, and the economy is doing much better than expected, or at least better than expected, if people do get jobs, if unemployment rate does come down, that is a net positive for the economy, which is a positive for your companies that you hold in your portfolio. Plus, me personally, as a European who uses euros to live, I pretty much like to see what I'm seeing with the dollar. If we look at euro to USD in the last 3 years, dollar became 10% stronger or the euro became 10% weaker. If you are in the UK, the British pound is also down 10.89% when going against the dollar. If we look at USD to Japanese yen, if you want to visit Japan, Tokyo, I think this year, even last year, is one of the best time to go there because your currency just became much more powerful. And so me, with most of my assets, if not all of my assets in US dollars, I of course, even though if some of these stocks are down a little bit just because of the USD to euro or euro to USD, I win on that, which is great. Anyways, in this video, let's talk about statements made by a VP at Nvidia, statements made by Microsoft as well, and why I do think that 2025 is going to be the year where you should definitely go long American AI and definitely go long semiconductor companies, despite the restrictions, the export restrictions, and all of that. Let's talk about that in this video. If you enjoy this type of videos, leave it a thumbs up, subscribe. If you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Let me first do a quick recap of what has happened last week. So job openings rise, hires slipped. Job openings rose more than economists expected in November, but other signs of cooling in the labor market emerged as fewer Americans left their jobs and hiring continued to slow. We've also seen that US job gains hit a 9-month high in December and unemployment rate did dip. What we can also see here is that right now the expectation of a rate cut in the next January meeting sits at just 2.7%, so there's a 97.3% chance currently that there is not going to be any cut in January, which, let's be honest, makes sense. Now, moving to the semiconductors. At the time of making this video, as you can see, most of them, actually all of them, are down pre-market. The ones that I have here on my screen are TSMC, SMCI, Micron, KLA, ASML, Qualcomm, Broadcom, Nvidia, Applied Materials, Lam Research, ARM, Intel, and AMD, all down pre-market. And of course, they were all down on Friday as well. And so what has happened? Well, overall market is down, so that affects semiconductors as well. And then we've had this. Nvidia says new rule will weaken US leadership in AI. We also had at the start of the year, the vice chair and president of Microsoft come out with a blog post called The Golden Opportunity for American AI, also addressing the new rules and exports restrictions and all of that. So let's start with the Nvidia piece. The first Trump administration laid the foundation of America's current strength and success in AI, fostering an environment where US industry could compete and win on merit without compromising national security. As a result, mainstream AI has become an integral part of every new application, driving economic growth, promoting US interests, and ensuring American leadership in cutting-edge technology. While cloaked in the guise of anti-China measure, these rules would do nothing to enhance US security. The new rules would control technology worldwide, including technology that is already widely available in mainstream gaming PCs and consumer hardware. Rather than mitigate any threat, the new Biden rules would only weaken America's global competitiveness, undermining the innovation that has kept the US ahead. Although the rule is not enforceable for 120 days, it is already undercutting US interest. As the first Trump administration demonstrated, America wins through innovation, competition, and by sharing our technologies with the world, not by retreating behind a wall of government overreach. We look forward to a return to policies that strengthen American leadership, bolster our economy, and preserve our competitive edge in AI and beyond. And even with all of these restrictions, China does still manage to come out with some amazing products, even products that might actually be leading products in their category. Have a listen to what the Perplexity CEO actually said not so long ago.
But the reality is some of the details in DeepSeek V3 are so good that I wouldn't be surprised if Meta took a look at it and incorporated some of that in Llama 4, right?
So what do these restrictions actually do? Yes, maybe on a hardware side, it does slow China down, right? But from the software's perspective, apparently it doesn't do that much and actually maybe even helps them because when you push someone in a corner, they will try to come out of that corner much, much stronger. And if they can do that without the best of the best tools and still manage to compete quite well, then you've just created a monster. And again, here there are some other solutions, which is why I want to talk a little bit about the Microsoft post that was made at the start of the year. They said the following: at Microsoft, we see a three-part vision for America's technology success. This starts with advances and investment in world-leading American AI technology and infrastructure. Second, the country needs to champion skilling programs that will enable widespread AI adoption and enhance career opportunities across the economy. By the way, we talked about these programs when we talked about Nebius Group. They have a part of their business that does exactly that, an education part. Finally, the United States must focus on exporting American AI to our allies and friends, bolstering our domestic economy and ensuring that other countries benefit from AI advancements. To be honest, as a European here, I would like to say that this is not America's fault. It's the fault of the American bureaucrats that apparently are afraid of AI because, well, we are still living in the Stone Age when it comes to AI. They then go on to talk about AI export. A third critical priority for 2025 is the promotion of American AI exports. President Trump's 2019 executive order rightly emphasizes the need to promote an international environment that opens markets for American AI industries, while protecting our technological advantage in AI and protecting our critical AI technologies from acquisition by strategic competitors and adversarial nations. Since then, the advent of generative AI has increased the importance of this priority. Even more critically, the rapid development of China's AI sector has heightened competition between American and Chinese AI, with much of this likely to play out during the next 4 years in international markets around the world. The most important priority for the US government won't be to match Chinese subsidies with American public spending, although there may be some parts of the developing world where development banks and foreign aid may have a role to play. The most important US public policy priority should be to ensure that the US private sector can continue to advance with the wind at its back. The United States cannot afford to slow its own private sector with heavy-handed regulations. The country instead needs a pragmatic export control policy that balances strong security protection for AI components in trusted data centers with an ability for US companies to expand rapidly and provide a reliable source of supply to the many countries that are American allies and friends. Finally, the United States is in a strong position to win the essential race with China by advancing international adoption of American AI. American products are more trusted than their Chinese counterparts, and our private sector is unmatched in its ability to invest in infrastructure around the world. With a balanced and common sense approach to export control policy, the United States can solidify the diplomatic relation that will be critical to global AI adoption. And while it's true that right now, yes, these export controls do hurt companies, right? Do hurt companies like Intel, AMD, Nvidia, ASML, all the other equipment makers, because China, as we've seen, especially with the likes of Applied Materials, ASML, Lam Research, and all of that, China makes up quite a lot of their revenue, although that percent should come down because, well, it was lower before, it just became much higher because of supply chain issues, pandemic, and all of that. But yeah, export controls do hurt these types of companies. Now, going into another Trump administration, one that is very much pro-technologies, pro-AI, less regulation, very much pro-tech, actually, I do think that it might be time to jump into the semiconductors as they present us with amazing opportunities. Yes, there will still be some export controls, but I don't think they're going to be as damaging as what we've seen in the last couple of years. Plus, we're talking here about great companies that are already doing quite well today, priced at an affordable, I wouldn't say affordable, maybe affordable is not attractive price. The ASMLs, the Applied Materials, Lam Research, AMD, even Nvidia, even though that keeps going higher and higher, although there was a small dip here. Intel as well. Intel, I still think Intel is of American interest, that it's not going to fail, and that's one of the main reasons why I don't see how Intel is going anywhere. But then again, I'm biased because I own Intel. But yeah, if you're interested in buying the ASMLs, the Applied Materials, the Lam Research of the world that did take a hit because a majority of their revenue comes from China, I think 2025 will be the year where these companies, these stocks will suddenly go, well, up and not down. I think American AI is going to go back and stay back on top for a long time, especially in the next couple of years. So yeah, do take advantage of the dips that you are seeing, especially in the semiconductor sector. I know we're seeing dips in the fintech sector, in other sectors as well, but the semiconductor one is a pretty important one that has been lagging the market for a while. I would say it peaked maybe in March, in April of 2024, and then the majority of them are still down from their peak. Now, it's true that back then a lot of them might have been overvalued. That is correct. But still, we've seen quarter after quarter that these companies still grow their business. They're quite profitable, free cash flow positive, unless we're talking about Intel, of course, but all the others improving. So yeah, there is an opportunity there, so you should take advantage of that. A lot of interesting companies. Maybe I'll do specific videos throughout the weeks, ASML, Lam Research, and all of that, revisit those at current levels. If you're interested in that, let me know down in the comment section below. Other than that, I'll see you all in the next one. Bye-bye.